Inari Amertron Berhad is principally involved as an OSAT or outsourced semiconductor assembly and test service provider, specifically for radio frequency or RF, fiber optics transceivers. So all these blocks all come from different manufacturers, and one of them who provides RF front-end modules is a guy called Avago Technologies, who is publicly traded as Broadcom. Now, net profits has grown at a rate of 28.3% over the past 10 years as well, starting from 14.8 million in 2010 to 178 million as of September 2020. Hi everyone, welcome back to our channel, the best place for long-term stock investors. My name is John, and in this video, you're going to learn about Inari Amertron Berhad, aka Inari, stock code 0166. As usual, we'll be covering the history and management, its business model, what are the latest financial status, as well as the potential risk and reward before you decide to invest. Let me ask you this. Which is worse, forgetting to bring out your wallet or your mobile phone? Electronic mobile devices. So ubiquitous that we really can't survive without them today. What are the key components that make a mobile phone or even a tablet so indispensable? It is the communication capabilities of your phone. More about that later. So we're going to start off with Inari's history and management first. Inari's main operating subsidiary, Inari Technologies, was founded by Macrinion, Hon Pangguan, and Insas Technology in June 2006 as an EMS or Electronic Manufacturing Services company. They did semiconductor packaging, which involved work like back-end wafer processing, package assembly of RF or radio frequency final testing as well. In the beginning, they built satellite TVs for OEM customers in Europe, and their big break came after becoming an EMS manufacturer for Avago Technologies. In March 2010, Avago became a shareholder in Inari Technology. Due to this equity ownership, Avago became more willing to share its confidential and proprietary information with Inari, cementing a long and mutually beneficial relationship till this day. Today, Avago is known as Broadcom, one of the largest semiconductor companies in the world. Let's get to know their management team. First up, Executive Director cum Chief Executive Officer Mr. Lau Kian Chong. An IT postgraduate from the University of Warwick, he started his career with Intel, KESP, and subsequently became a Senior Vice President within the Globetronics Group before joining Inari. He has more than 28 years of experience in the EMS and OSAT niche subsegment. Ms. Chong Po Leng is their Group Chief Financial Officer and holds an Asian CPA. She has held various management positions in various industries before joining Inari. Mr. Cheng Oi Lin is their Senior Vice President of Business Development and Amertron, Philippines. He started his career with Hitachi, then moved to Hewlett-Packard in their automotive lighting organization. He was at Cree Incorporated Asia before joining Inari. Last but not least, Mr. Sabran bin Samsuri, their Chief Operating Officer. AMD was his first hop before moving on to AESM and ended up being their VP of Operations before joining Inari. By the way, have you gotten a copy of our stock portfolio guidebook? This guidebook shows you how to start constructing your six-figure stock portfolio and how the rich actually invest across different asset classes. Best part, it's free and you can find the link in the comment section below. Next up, Inari's business model. Inari Amertron Berhad is principally involved as an OSAT or outsourced semiconductor assembly and test service provider, specifically for radio frequency or RF, fiber optics transceivers, optoelectronics, sensors, and custom IC technology. The services they provide to their customers can be divided into a few segments. Among them, wafer processing services like probing, laser marking, die sawing, back grind, flip chip, dice tape and reel, and automated visual inspection. Man, mouthful. The other is IC chip fabrication and wafer certification in the fiber optic chips. Next is the Advanced System in Package or SIP, Assembly and Test Services, including Fine Pitch SMT or Surface Mount Technology. Last but not least, they also provide services like custom sensors of IC package design, as well as direct customer drop shipping. Kind of like your Amazon drop shipping services, I guess. Now, I know that was a lot of semiconductor jargon that I just downloaded, so I'm going to oversimplify them here. You see, consumer electronic products today are manufactured like Lego blocks, with different parts serving different functions. You have a block that processes photographs and images, one block that processes your audio signal, and most importantly, a few blocks that manages your communications such as your Wi-Fi, Bluetooth, and cellular networks, aka your 4G or 5G communication. So all these blocks all come from different manufacturers, and one of them who provides RF front-end modules is a guy called Avago Technologies, who is publicly traded as Broadcom. Now, Broadcom mainly designs these RF front-end chips and outsources the manufacturing and testing to OSAT players like Inari. Think of Inari like your woodworks contractor for your home and Broadcom as the interior designer. The chips that Inari produces for Broadcom then ends up with an EMS contractor like Foxconn to fully assemble all these components into a complete mobile phone like your iPhone 12. As you can see, their business objective is to manufacture and test certain components for their clients at scale and as cost efficiently as possible. If you like what you're seeing so far, do me a favor and smash that like button, and if you're new to our channel, remember to subscribe and hit that notification bell so you know the next videos are out. What about Inari's financials? As a company that is part of the semiconductor value chain, it was not spared from the continuing US and China trade war. Secondly, at the time of this recording, the COVID-19 pandemic has brought many businesses to its knees. Fortunately for Inari, the lockdown that most governments have implemented have increased the demand for online services and electronic products. If you haven't noticed, most electronic products like computers, peripherals, mobile devices are flying off the shelves during the pandemic. For the trailing 12 months ending September 2020, Inari managed to secure a net profit of 178.1 million back on a revenue of 1.09 billion. That means their revenue has grown at a rate of 21.5% over the past 10 years, starting with 154 million in 2010. Their net profits has grown at a rate of 28.3% over the past 10 years as well, starting from 14.8 million in 2010 to 178 million as of September 2020. That means they're approximately doubling their earnings every 2.5 years. Gosh. Their operating cash flow did take a drop to 322 million from 347 million the previous year, as it was a drop in their net profit as well. On the balance sheet side of things, they are in a net cash position as their cash and cash equivalent of 632 million is nearly 3 times that of their total liabilities of 216 million. Their financials are in a good bill of health in my opinion. Let's discuss about some of Inari's key business risk. The biggest risk would actually be the nature of the semiconductor industry itself, which is rapidly changing. This means Inari will constantly need to be at the forefront of embracing these new changes in the most cost-efficient manner. Any escalation of trade war will likely also have an impact to the semiconductor value chain, and Inari will not be spared the brunt of trade sanctions imposed by certain countries against each other, like the US and China trade war. Secondly, their current revenue streams are very dependent on a few major customers. And these major customers will likely demand that Inari continue to build their capacity as well as their technical know-how in helping them manufacture at scale and at cost. Third, Inari's revenue is very dependent on the production and operational uptime of their facilities. Their daily operations are susceptible to events like fire, explosion, flood, energy, or even a health crisis. Furthermore, they have a manufacturing base in the Philippines, which is a country that is prone to hurricanes. Finally, they're exposed to the volatility of raw material prices and the fluctuation to the currency exchange in which they are sold. Most of these raw materials are priced in US dollars for things like wafers, PCB and substrates, as well as gold wires. So it's not all doom and gloom with just the risks. What are the potential growth catalysts for Inari? The products and services that are offered by Inari are for a global market and therefore not constrained to the growth of the Malaysian economy alone. This augurs well as the growth for the semiconductor industry is positive based on the growing demand of electronic devices, from your phones to your watches to even, pacemakers. It also helps that their niche in the industry is RF. Remember, radio communication, radio frequency, and the communication modules that will ride based on the growth of the 4G to 5G transition. Secondly, is their long-standing relationship with their customers. While they have a concentration risk of only having a few key customers, these customers have spent a considerable amount of time qualifying Inari and their OSAT vendors, and it will be very painful and costly to re-qualify another vendor. This doesn't even take into account the production capacity of the new vendor if the switch actually happens. Therefore, while not impossible, it is unlikely that their clients will switch to another vendor unless something terrible happens. Thirdly, is their long-standing relationship with their equipment suppliers that are key to their production capabilities. A good working relationship allows partnership in R&D and customization of these machines for Inari. It also allows equipment to be purchased at competitive prices, on favorable payment terms, and on short notice. This is crucial for Inari to be able to position themselves well during an industry upcycle when there's a sudden demand for their services. Last but not least, the Malaysian government has been gracious to allow more technologically advanced companies to obtain pioneer statuses that give them favorable tax rebates on a 5+5 year period. Certain of Inari's subsidiaries are still granted pioneer statuses by the government today. As a conclusion, there is a lot of tailwind for Inari going forward. While it may not be smooth sailing, but based on how the company has grown since listing in 2011, they have shown that they have the pedigree to compete in the global market with the other OSAT big boys. Thanks for staying till the end, and do watch some of our other videos on the channel. Follow us on Facebook and Instagram with the links below, and see you in the next video.